Good afternoon and welcome back to the Public Service Commission of South Carolina. We are resuming in the hearing in docket 2022-142-WS, application of Daufuskie Island Utilities Company Incorporated for an adjustment in rates. Let's take a roll call of commissioners. Present in the hearing room, we have Vice Chair Powers, Commissioner Carol Lee Williams, Commissioner Caston, Chair Belser, and with us virtually we have Commissioners Irvin and Commissioner Thomas. Any preliminary, we're in the midst of these witnesses, ORS second panel of witnesses, and I believe you ready to question?
I was going to cover a preliminary matter with you.
Oh, okay. That's fine.
The parties have conferred with regard to the spreadsheets and other information that Mr. Sullivan was discussing, and so I'm proposing as a late filed hearing exhibit DIUC's supplemental response to discovery request 3-7, which also includes at the end a second supplement by email. This would include the spreadsheets which Mr. Sullivan was speaking about.
Any objection, Mr. Mustian?
Sorry.
Mr. Knowles, no objection for ORS.
Thank you, Mr. Knowles. Any other party? Any objection? We will accept. Give me that supplemental response. That was 3 dot what? Or 3-7. And we will mark that for identification as hearing exhibit 19. Receive that into the evidence of this case. Anything further, Mr. Gressett?
No, thank you.
Thank you. Let's see. Cross-examination for the witnesses. Department of Consumer Affairs?
No questions, thank you.
Good to see you. Mr. Pringle, on behalf of POA.
Thank you, Chair Belser. Good afternoon, Mr. Hunnell.
Good afternoon.
By addressing you, that means I'm going to ask you questions first. It's an old lawyer trick.
I kind of understood that.
Okay. You had some discussion or gave some testimony about a recommendation that the applicant find or select a business to do certain studies via an RFP. Is that your testimony?
Yes, that's my recommendation.
Okay, and just for purposes of discussion, and the commission may or know, but an RFP stands for a request for proposals?
Yes, it does.
Okay.
So I'm asking for a competitively bid process.
Okay, meaning that as a result of such a process, presumably a competitive price that also provides a proper service or a proper contractor would be beneficial to customers?
Yes, they should find a qualified consultant who's able to do the services provided at a reasonable price.
Okay.
Not just Mr. Gasella doing the studies at whatever price he chooses to charge the captive customers of Daufuskie Island.
Okay. And
Excuse me, Mr. Pringle. Mr. Hunnell, I'm going to ask you to talk into that microphone a little bit, please. Okay. Thank you.
I can't get it. There we go. Is that better? Thank you.
And in your duties with ORS, do you have occasion to become familiar with other dockets and proceedings before this commission?
Only specifically water and wastewater dockets.
Okay.
I don't get involved in a gas or electric.
Okay. With respect to water and wastewater dockets, it's true, isn't it, that some water and wastewater providers do use a request for proposal or a request for qualifications process when they choose vendors to perform services and on behalf of a utility?
Yes, they do.
Okay. Thank you very much. Now, I had to even check. Ms. McClone, I don't believe that you and I have met. My name is Jack Pringle. I represent the POAs here.
Good afternoon.
This is your first time testifying before the commission, is that right?
Yes, that's right.
Okay. But prior to, and you mentioned a little bit about this, but I just wanted to explore a little bit. Tell me about what you did just particularly in West Virginia?
Sure. Are you talking about the tax department?
Sure.
I assume.
Yeah.
So as the director of research for the research division of the West Virginia Tax Department, I oversaw the division and had many responsibilities. We had periodical reports that we would do. We would do estimates as they were requested from the executive office, from the legislature, on fiscal impacts, and when appropriate or necessary, excuse me, I would make presentations to legislative subcommittees to talk about the analysis, our assumptions, our results, as a way of communicating to the decision makers what our recommendations might be.
So were you looking at proposed legislation, for example, that had to do with tax?
That was some of it, yes.
Okay.
So during legislative session, when there was a bill introduced, just as a for instance, if there was a bill introduced to alter the consumer sales tax, whether it was to raise it or lower it, my office would receive that fiscal note, which would be a request for the fiscal impact that would have on the state's revenues.
I see. And did that ever involve an exploration or comparison to the way a sales tax, for example, is applied in other jurisdictions?
Absolutely.
Okay. Did you have occasion to also seek out sources for research or for analysis or for background that would inform your ability to then do your job and report to legislators?
Absolutely. We were involved at the tax department with an organization. I think it's the FTA, the Federal Tax Administrators. I may not be right on that. It's been a while.
Yeah.
But there was a listserv where we could email questions and ask, we're looking at this change, whether it would be, what inputs have you used, or what, for a state, for example, maybe they have a tax that we didn't have currently. What have you seen as a result of your tax being implemented for a year or a few years? And then we also had kind of a directory where we could reach out by phone directly to individuals in certain states.
Would you describe what you did as a work-in process or a learning process?
Certainly, as far as contacting other states.
Well, as far as just your knowledge about any particular issue or your opinion about the application of a law to a situation or the way laws affected West Virginians.
Absolutely. So when I worked at the research division, we obviously through the tax department had attorneys, and we would consult them regularly for interpretations of whether it was a statute that was law or a proposed piece of legislation. But we also, just as a general course of business, we had a copy of the West Virginia Tax Code. Each one of us had one at our desks. And it would just be a process of going through, assessing what the changes would be, doing our best to research whether it was knowledge that we were able to find ourselves, to reach out to others who may have solid information, and effectively do an objective analysis of whatever the question that might have been posed to us would be.
As you learned new information, did you adjust your recommendations at times?
At times, yes. So as we would learn new information, we would vet it, if you will. There's a level of judgment when you're making estimates and projections. You want to make sure that you're using a good source. You're wanting to make sure that if it's a study that someone else has done, that you have an understanding of how that study was conducted. Looking at their inputs, for example, is very helpful. So yes, but we would let these other pieces of information as we found them and as we deem them appropriate, we would let them inform our research and analysis.
Okay. And like I said, does that process always mean that we're also looking and trying to find sources, additional sources that could either confirm the way you were headed or could inform what you did and how you reported?
Absolutely. I've said many times in my career, I kind of wish I had a crystal ball because it would make my job easier. But we don't have a crystal ball that we can reference, obviously. So you have to take, within reason, you have to take the information that others have provided as well. And it's very much a team effort, if you will.
Sure. Okay. All right. Well, thanks a lot for answering my questions, and it's certainly nice to meet you.
Thank you, you as well.
Thank you, Mr. Pringle. Mr. Gressett?
Afternoon.
Good afternoon.
Afternoon.
Ms. McGlone, I think I'll ask you a few questions first, if that's all right.
Certainly.
Did you discuss your testimony here today with anyone before you testified?
Do you mean before taking the stand today?
Yes.
Okay. So in the process of developing my testimony, if this answers your question, we did have discussions internally at ORS, the various things that we were seeing, questions that we had, conclusions that we were arriving at to receive feedback, certainly.
Did you talk to Mr. Pringle about your testimony before today?
I did not.
With regard to your calculations in this case for cost of equity and the use of a proxy group, can you tell me why you chose to use a proxy group?
I can, absolutely. So Daufuskie has requested that its rates be set based on return on rate base methodology, which involves the determination of a return on equity that will be used as an authorized return on equity. It's an opportunity for the company to receive a return, so to speak. And in doing so, one must conduct cost of equity, analysis. Cost of equity analysis involves the use of capital market data. The cost of equity cannot be directly measured, and so it must be estimated. Since Daufuskie is not a publicly traded utility, it does not have the data that would be necessary to directly estimate its cost of equity, so a proxy group stands in lieu of that. I chose the companies that I did because they are water, wastewater utilities with regulated U.S. operations.
And what factors from Daufuskie to the proxy group did you compare?
The largest or the biggest comparison, I guess you would make, is that they are all water, wastewater utilities. As such, they're going to have similar risks. They're going to undergo similar business challenges. They're going to be subject to similar regulations, water quality, for example. In compiling a proxy group of comparable companies, analysts generally want to look at, when we're doing utility analysis, for example, want to look at utilities within the same industry. I wouldn't want to use, for example, electric utilities because they are subject to different risks.
And did you account for any differences between the risks facing Daufuskie Island utility versus your comp group?
So
Proxy
again,
group, sorry.
sure, no problem. So again, the assumption that is made is that the proxy group is comparable because they are within the same industry. The availability of publicly traded water, wastewater utilities in the U.S. is very small. So you almost have to use the companies that are available to you. I mentioned in my testimony that I removed 3 of the 10 companies that Value Line cites as water, wastewater utilities that are publicly traded because they just didn't have sufficient data with which to perform the analysis.
And you said 3 of the 10 used by whom?
By Value Line.
Okay. And what is Value Line?
Value Line is a service, it's a subscription service that provides, honestly, a plethora of analysis of publicly traded companies, provides estimates of beta, for example. That's the source of my beta that I use in my CAPM. They just provide a lot of information. You're able to pull a lot of financial data out of Value Line that's useful in cost of equity analysis. And
what methodologies did Value Line use to analyze the data upon which you relied?
What methodologies? There are a variety of methodologies that Value Line uses. Its beta, for example, is a historical beta over the last 5 years. I believe it looks at weekly prices to calculate that. As far as the financials of the company, it would look at the companies themselves. Value Line has a very large team of analysts to look at these data points and determine historical data, so year-over-year changes in various data points, pulling the stock prices, for example, calculating a variety of data points.
Are you yourself able to do all those calculations that Value Line does?
If it's a question of capability, I think that probably somewhere I could have the capability, but there is so much information that Value Line and its staff are able to process. I alone could not do that.
And did you do anything to confirm the methodologies used to create the data that you brought into your analysis here?
Could you repeat the question? I don't
Sure.
think I followed you.
Did you do anything to confirm or identify the methodologies used to create the data that you then imported into your work here?
I would say, in answer to your question, not directly, and the reason being that Value Line is a very well-respected publication that many costs of capital and analysts use and reference.
So if you don't know the methodologies, you could not independently evaluate the reliability of that data, could you?
I certainly think knowing in detail the methodologies, if I, for example, were going to be reproducing the calculations, certainly that would be helpful. If it were my job to reproduce those calculations, I would need to know how Value Line has approached each of its data points. For purposes of my analysis in this case, however, I didn't feel that was necessary because Value Line is so well respected.
Do you know what error rate exists in Value Line data?
It's a good question. I don't offhand.
Would that be relevant to your determination of whether it was reliable data upon which to rely?
I don't think knowing that number would necessarily impact my use of the data. Again, Value Line is a very well-respected publication. If in any way there were errors in its calculations, I would imagine they would be very small because there are so many people who use the services and are looking at the data, and I'm sure they have plenty of internal checks and balances to double check their calculations.
You're sure they have internal checks and balances, but you didn't do anything to investigate their checks and balances because it's relied upon by lots of folks, right?
You are correct in stating that I did not do my own version of checks and balances.
Okay, and the reason I asked about that is because when you said sure, that implied a level of certainty that I think you have expressed in your opinions and in your summary today when you, for example, stated that the ROE requested by the utility was excessive, inappropriate. How certain are you that the ROE you recommend will result in the real world a comparable result?
A comparable result to?
The number you are suggesting.
Okay. If I am understanding your question correctly, I am very confident in my analysis, the reason being that I have used very widely used and well-respected models, the DCF and CAPM. This commission has relied on those many times in its orders in determining an appropriate ROE for regulated utilities. As a result of my calculations, my range was 8.41% to 9.73% with a 9.07% midpoint. Cost of equity analysis, while it is not an exact science and we can't come to one right number, The methods that I used and the inputs I used are very standard, and that makes me very confident in my range. And to an earlier point that you made, that's why I feel that Mr. Guastella's 10.5% recommendation is excessive. It's outside the range of reasonableness, so to speak, that I have determined through my analysis.
Did Mr. Guastella account for things like the fact that Daufuskie Island is only accessible by water?
I'm trying to remember if he mentioned that in his testimony. If he did, I'm not recalling offhand.
Okay. And did any of the comparables that you selected for your proxy group require investors to personally guarantee the liabilities of the company?
I do not have that level of data to make a determination on that, so I would not have a good response.
Okay. And did any of the companies in your proxy group let me ask this another way. DIUC has not paid its shareholders a dividend ever. Are any of your proxy companies in that same situation?
No, but one of the fundamental requirements of doing a DCF calculation is knowing the dividend that is paid so that a dividend yield can be calculated. So if one of my proxy companies had not paid a dividend, I would not have been able to include them.
What kind of dividends do your proxy groups pay?
Sure, let me pull that up. I don't have that committed to memory.
Sure.
So I am looking at Exhibit EPM 5, page 1. In the first column, I have each of the companies listed by their quarterly dividend per share. And then I have calculated an annual dividend per share, which is just that first column times 4. And I did not do an average of the actual quarterly dividend, so I'm not able to provide that offhand. But on an annual basis, on average, the proxy utilities are paying a $1.37 dividend to shareholders with a median of $1.16.
And how many shares are owned by each of those, or exist for each of those companies?
I can also give you that. Just get to the right page here.
Sure.
So the shares of, do you want me to go one by one?
Yes, please.
Okay. The shares of American States Water looks like just shy of 37 million. And that is as of April 28th of this year.
So let's start with that one. If American States Water has 37 million shares, what is it paying out on its annual dividend?
That's annual dividend.
Do we multiply that by 1.46?
That may be the number I'm trying to get back there.
Yeah, sure, it's no problem.
All right, so yes, on an annual basis, $1.46 times roughly 37 million.
Let me see if I can turn it back on. No wonder Mr. Guastella had trouble with this. 1.46 times 37, that's 6 zeros?
Yes. $5,402,000? No. 5 billion? It could be. I'll have to accept that subject to check.
Let's try again. Why don't I give it to you?
So I'm just going to go ahead and object at this point, just essentially in the interest of time. I think it's clear how to do these figures, and so it'll be easy enough from the record for anybody who's interested in this information to calculate it.
I thought we'd just calculate one to be sure it's clear in the record.
You know what? That's fine. Withdrawn.
Okay, so if we have 37 million shares for American States Water, you multiply that by the annual DPS you have listed of 1.46.
That comes out to, per my calculation here, about $54 million.
Okay. So you think Daufuskie is comparable to a company that pays out a dividend of $54 million a year?
I think Daufuskie is comparable to American States Water and the other companies in my proxy group because they're all regulated water, wastewater utilities located in the U.S.
Is that the only reason?
It's certainly the primary reason. I think it would be safe to say that's the reason that I have used.
Okay. So were you able to compare the credit ratings of your proxy group to Daufuskie?
I was not. Daufuskie was unable to provide credit ratings for me to compare.
Did that give you any concern?
Not necessarily. It was just a criteria that had I had the data, I would have been able to do a comparison.
Did you not believe that your work for this case was made especially difficult since the company doesn't have credit ratings to compare to the proxy, and you hadn't come across a decent proxy ratings for comparison?
If I understand your question, do I think that made my analysis more difficult? Is that a fair characterization?
Yes.
Okay. No, I actually don't think it does. Daufuskie has elected in this application to have its rates set based on return on rate-based methods. This is the standard practice for conducting a cost of equity analysis.
But in asking for their rates to be calculated that way, they in no way suggested that they wanted to be compared to a company that issues a $54 million dividend every year, did they?
That may not have been a direct request of the company, but again, I will reiterate, cost of equity analysis requires the use of capital market data, which can only be obtained through the use of proxy group of companies, unless the subject utility is publicly traded, a proxy group of companies that are publicly traded so that they would have the available data.
Could you do a proxy group of not publicly traded companies?
The data would not be available. So for example, just as an example, in my DCF calculation, I calculate a dividend yield, which is the annualized dividend divided by the price per share. And then there's also a growth factor, which is, I use a variety of per share estimates, both historical and projected, to determine my growth factor.
Okay. Who is Rick Baldino?
Mr. Baldino is a consultant that ORS has used on a couple rate cases in the recent past since I've been at ORS. Most recently, he was our ROE consultant for the Piedmont Natural Gas rate case. He's a consultant for Kennedy and Associates.
And do you remember the day on which you filed your testimony, pre-filed it in this case?
My direct, I believe, was filed September 29th, and Sir rebuttal was filed October 20th, I believe.
And on September 15th, did you write to Mr. Kennedy telling him that, quote, "The closer I get to filing testimony, the more I'm second-guessing my approach"?
I did write that in an email to Mr. Baldino while he was out of the country. And I did use that wording after a brief email exchange between he and I, where I was asking him effectively, here are the processes I'm looking at to construct a proxy group of comparable companies. Here's the way I'm looking at risk and wanting to make sure in doing thorough and due diligence in my job, wanting to make sure that I had not missed anything else. And in his reply, he confirmed that I was on the right track. He had nothing else to provide that I might have missed to consider.
Okay, so you were second guessing your approach until Mr. Kennedy confirmed that he thought you were on the right track.
I don't think that's quite the characterization of the intent of what I was saying. I had, before contacting Mr. Baldino and asking him the questions that I did, I had determined the methods that I intended to use. Were they final? No, pending any additional information that may have been pertinent. But I had already established my methodology. I knew which models I was planning to use. I knew which data inputs I was planning to use. And in thinking through the company's statements that it had made, I was trying to make sure that I had not missed something, whether it was in my education, in studying for the CRA exam, in working with other consultants, in reading other testimonies, and looking at other analysts' methods.
I guess what I'm asking is, just before your testimony, you were second guessing your approach, and you stuck with that approach, and you've now presented it to the commission. If the commission goes along with your approach, how sure are you that it's the right approach?
I feel very confident in my approach. I mentioned that Mr. Baldino was a consultant in a recent rate case for the ORS, the Piedmont Natural Gas rate case. And after the hearing concluded and the commission issued its final decision, it accepted Mr. Baldino's method for conducting return on equity analysis. The fact that I wrote in an email to him that I was second guessing is in no way, shape, or form indicative of me having concern that my methods aren't good or worrying that my methods aren't good. It was much more a check for myself, as this is the first time that I have conducted cost of equity analysis that I have put into testimony and filed before this commission. Just wanting to be thorough and just wanting to do my due diligence and making sure that I had not left a stone unturned, so to speak.
Do you have any information on whether your proxy group members ever faced bankruptcy?
I cannot say that they have or have not.
Do you know anything about the challenges that those proxy group companies have with regard to operations?
Offhand, I don't believe so.
Well, not just offhand. You didn't get any, did you?
Didn't get any information about challenges that they were facing. I cannot recall coming across that in my analysis.
Okay. I think that's all I have for now.
Thank you.
I know it's your first time, but you did great.
Thank you. I appreciate that.
Morning, Mr. Hono. How are you?
Good. It's afternoon, though. I know it's been a long 3 days, right?
Am I correct that DIUC is in compliance with all the requirements that DHEC has for the water utility?
According to my review, during the test year, they were, yes.
Okay. And during the test year, were they also in compliance with all requirements DHEC has for wastewater utility?
Based upon the DHEC business records that I reviewed, yes.
Okay. And as part of your review, did you review the 2021 water quality report and the 2021 CCR?
I reviewed the CCR, yes.
Okay. May I approach the witness?
Yes.
Is that the document you reviewed?
Yes, and this was also the document I believe that you included with your application.
Correct.
Mr. Grasser, do you have a copy for counsel?
That's the only one I have.
Mr. Huber, if you need to look at it before
Please do.
questions,
Thank you.
please look at the one that Mr. Hunnell has. Mr. Gressett, did you say this was included in, or in response to Mr. Hunnell, that this is included in the application?
I believe.
I testified to that, yes it is.
Okay.
Thank you.
Mr. Hunnell, are there separate requirements beyond DHEC's requirements that you evaluate for a utility going through a rate case?
No,
And
I'm not a water quality expert. I rely on the regulatory body that is, which is DHEC.
got it. And did you conduct a compliance review of Daufuskie Island Utility?
I did.
And is that included as Exhibit DPH1?
Yes, it is.
Okay. And did you find in each category examined that DIUC was in compliance?
I did.
Okay. How much does it cost to get a depreciation study done?
Would depend upon the size of the utility.
Say for a utility Daufuskie size.
I would estimate somewhere around $20,000 to $30,000.
Okay. And do you have an estimate for a cost of service analysis?
It would probably be less than that.
Okay. And is ORS requesting both of those studies routinely now in rate cases?
No, I would assume a utility the size of Daufuskie could probably use it for their next 3 or 4 rate cases.
Okay. Have you ever performed a depreciation study?
I have not. I have managed consultants who are completing the depreciation studies.
Can you explain that to me?
One of my jobs at my previous employer, American Water, as part of my putting together, I was charged with the end-to-end preparation of the overall revenue requirement itself. As part of that is working with the consultants who are doing cost of service studies and depreciation studies, feeding them the information that they need to complete their studies, reviewing their studies when they come back, and integrating their studies into the overall revenue requirement.
Did you used to work for the American Waterworks that is listed in the proxy group we were just discussing?
Yes, I believe it's American Waterworks Company Incorporated.
Would you compare the operations of that company based on your knowledge to the operations of Daufuskie Island Utility, pointing out any differences?
Really, the only difference is they're much larger. They produce water and they treat wastewater.
Do you think Daufuskie faces any particular challenges that the American Water Company did not?
I think both entities face their own challenges. Just because you're larger doesn't mean you don't have challenges.
But if you're larger, you can probably weather those storms a little more easily, right?
Maybe.
Based on what you know, would you invest in that American Water Company or Daufuskie?
I don't think that's a fair
Objection, what's the
question.
relevance?
Sustain.
On On page 9 of your testimony, you state that depreciation systematically moves the asset's cost from the balance sheet to depreciation expense on the income statement over the asset's useful life. Did I read that correctly?
Yes, you did.
Okay, what is the accounting credits and debits that moves the cost of assets on the balance sheet to the income statement?
You would debit accumulated depreciation and credit. Well, no, go the other way. You would debit depreciation expense and credit accumulated depreciation.
So the assets would not stay on the balance sheet until retired?
Yes, the assets do. You're moving the depreciation associated with those.
So depreciation systematically moves the asset's cost from the balance sheet to depreciation expense on the income statement.
Right. So let's say, for an example, that an asset cost $100 and it has a 100-year life depreciation. So for every year, you would take $1 from accumulated depreciation and you would move it to depreciation expense.
And the 99 would remain
And
where
the
it was.
99 would remain on the balance sheet. That's correct.
Perfect. Mr. Guastella testified during the first day of the hearing. Were you here for that?
I was.
Okay. I believe he mentioned something called the National Regulatory Research Institute. Are you familiar with that?
I am not.
Okay. I think that's all I have. Thank you.
Great. Thank you very much.
Thank you, Mr. Gressett. Commissioners? Commissioner Caston.
Thank you, Madam Chair. Good afternoon.
Good afternoon. In fact, I have a whole thing just for you. I listened to many of your questions, and I hope I have some of the answers that you're looking for.
I
I
wasn't
may
going to
not
ask you
have them all,
anything.
but I might have some of them.
Actually, welcome.
Thank you.
And is it McGlone or McGlone?
McGlone.
That's easier. Thank you.
You can say it however you want.
And Ms. McGlone, I think you said this, but did you perform your analysis independently?
Absolutely. I was able to develop my own use of the discounted cash flow and capital asset pricing models. I determined my own inputs, and I did it as objectively as I could.
Did you coordinate your analysis at all or results in any way with DCA witness Rothschild?
I did not know.
Now, Mr. Honnold, thank you.
Yes, sir.
And I don't remember what the questions were now anyway, so I'll see. Maybe I'll stumble over them. But in the conversation relative to, I guess, the sanitary surveys, CCR is not the same, in the wastewater, the DHEC sanitary surveys and such. And this is for my edification. In the evaluation of water and wastewater utilities, does ORS evaluate items such as firm pumping capacities, existing and committed demands, unaccounted for waters, and
No,
anything?
sir. In South Carolina, that's DHEC's responsibility.
Is
My
that it?
understanding?
But my follow-up question
Oh,
to
okay, I'm
that.
sorry.
That's quite all right, because that answered that question. Are any of those things or type things included in DHEC's sanitary survey?
Not to my knowledge, no.
Generators. I remembered.
Generators, yes.
Were these generators portable generators, or were they fixed generators
No,
like
they're
at the
definitely
well?
fixed generators.
Fixed generators
Yes,
at like the well side or the lift stations?
I observed two at well sites, and I saw one at the large above ground storage tank. The elevated storage tank also has one there.
Then I'll ask the question, is it a common practice to you, whether required by some regulation or just standard practice, is it a common practice to run those type generators on a daily basis?
I have no knowledge of what the actual practice is, but I can tell you that when I was at the site inspection, I was told by the company that it does it once a week. Mr. Johansson told me that.
I don't, it seems a little more standard, but if they were,
I thought so myself. I thought that was a reasonable amount of time to do it.
that's good enough.
Mr. Hunt, I'm having trouble. I need for you to thank you.
Sorry.
I'm trying to understand the Hague Point, I think in your testimony, page 7 of 21 on your direct, Hague Point wastewater effluent, excuse me, is used as irrigation on Hague Point golf course, correct?
That is my understanding, correct?
And that's the reclaimed water, basically treated effluent.
Yes, it's treated effluent. Of course, it's not potable water, but it is treated effluent.
And people never lick their golf balls after that either. And wastewater effluent also goes to the Bloody Point golf course. Is that correct?
I know that the permit allows for that. I'm not sure that still actually takes place because part of that golf course, I'm not sure, is still operational.
Well, that was going to be my next question. So you don't know if it still goes there, but
No, but that is their permit to allow that. If they're still doing it, I don't know.
well, that's what I was trying to get my head around because we had one witness talking about a pump station that was down. Excuse me. I'm going to blame it on something in the air. That there was a pump station down in that area and it's going to a lagoon. And I'm assuming those type lagoons were for pumping effluent, the treated effluent, to the golf course. So, again, do you know if the effluent is going to that particular lagoon, not Hague Point, but to the Bloody Point?
I do not.
Okay. So we don't really know what's happening to that.
I do not. I will tell you though, at the Melrose side, which I believe is Bloody Point, there are 2 lagoons at the wastewater treatment plant. Only one lagoon was in operation when I was there. The other one is currently empty. So they would have to take a lot more incoming before they would need to discharge to somewhere else.
So one may be kind of as an equalization basin now, and that's
They
it.
may
Is
be
it?
using it as that, yes.
And of note, I noticed it's on page 421 of your direct. You state DIUC is not a small water utility and wastewater utility, but a Class A as classified by NARUC, but a Class A water utility. Well, please elaborate on that.
Water and wastewater utilities are classified by NARUC as either A, B, or C based upon their revenues. Based upon Daufuskie Island's revenues, they are a Class A or the largest type of water utility.
Or is that distinctly different than calling them a small, or it's just the way they classify them?
It's just the way they classify them. And again, it's by revenues, not by number of customers or size or connections or anything like that. It's strictly by revenues.
And on page 4 of your direct, lines 3 through 4, you talk about a cost of service study to look at cost of the utility without assessing. Well, you recommend a cost of service study, correct?
I do.
Does a cost of service study, does it consider or look at whether a utility is running efficiently and economically or whether it isn't, or is it just look at whatever the costs are and that's how it evaluates?
It looks at the cost to service that particular rate class and assigns those costs to that portion of the revenue requirement to that rate class specifically.
And it doesn't look at anything relative to whether you're doing it well or not well. It's just simply whatever the costs are that you have.
You have that correct, yes.
I'm sorry to disappoint you, but that's all the questions I got.
Okay.
All right, thank you. Thank you.
Commissioner Williams.
Thank you, Chair Belzer. Good afternoon to both of you. Yes,
Good afternoon.
you and I get to play this game around
Okay.
the court reporter. So since I've got a really great view of Ms. McGlone, I'm going to start with you. You, I believe, have given us a range, ROE-wise, from 8.41 to 9.73. Is that true?
Yes, that is correct.
What guidance, standards, best professional practices do you have to offer to us if we want to look at something other than the midpoint that you have? Why would we consider going with a higher number? Why would we consider going with a lower?
Certainly, that's a great question. As I think I mentioned earlier, cost of equity analysis at the end of the day is a manner of estimating. So there's no one true right number or one necessarily better number over another. What I have provided in my range is what I would consider an acceptable range, anywhere within that the commission, should you find my analysis compelling, anywhere that the commission should choose to authorize an ROE for Daufuskie. I provided the midpoint of 9.07% as it is a balancing of the high and the low of that range. And I would consider that a benchmark, if you will, for a company that is being efficiently and economically managed. The commission will obviously have a hard task ahead of it to determine where else that number might best go. I know the commission has a wide latitude of various factors that it can use to determine its authorized ROE.
I'm going to rephrase what you said and see if this is what you said. That efficiency and economical management would be a reason that we might evaluate going up or below your midpoint.
I would agree with that. Yes, I would agree with that.
Is there any other guidance?
Unfortunately, I think any other guidance might be outside the purview of my testimony.
Okay.
Apologies.
Thank you. I appreciate that.
Of course.
And now we'll play the shifting dance. Mr. Hunnell, I asked Mr. Sullivan some questions, and I think I may have asked Mr. Gustella a question about independence and that being a factor with regard to the cost of service study or the depreciation study. What I heard from your testimony was that you are recommending that there be an objective process to ensure that the best value and price is incurred for those two studies. Is that correct?
Yes, ma'am.
And is independence, I think you said this, but if Gustella was to respond to that and they were the most economical, and best firm to be able to do that work, that would be acceptable in your professional opinion?
Yes, ma'am. Mr.
Okay.
Costello is certainly qualified to do the study.
Okay. I appreciate that because I had a different impression earlier, and it's good to learn through this process. And I like clarifying my own misunderstandings. I have a few more questions, but let me see. Okay. So you're really valuable because you, for probably a lot of reasons, but you visited on site, and did you find any evidence of any unsatisfactory water quality in the Daufuskie system?
I did not.
Okay.
All of their facilities appear to be well maintained.
And are you aware of any customer service issues?
I am not. I did check with our Bureau of Consumer Services, and I was told that during the test year they had 4 customer complaints. All those complaints were billing related complaints. One was a complaint concerning the credit card processing fee. 2 were high bill complaints that were, the bills were correct, and they had 1 high bill complaint which they corrected.
Okay. What type of operator license is required to operate the DIUC facility?
I believe in South Carolina they only require a D license to operate both of them based on their size.
Okay. And that's related to the testimony we received earlier this week and the different levels.
Yes, I believe like an A level, and I'm sure Mr. Caston can speak to this, but an A level would be someone who's running a large surface water treatment plant that's producing millions of gallons of water a day. And that's certainly not this operation.
Okay. Are you aware of how many operators are currently employed at the facility?
When I did my site visit, it was my understanding that they had 3 employees. One has the actual operator's license, and that was Mr. Johansson. They had another employee, I don't remember his name, I'm sorry. He had either just gotten one of his licenses or he was working towards his license. And then the third was just a laborer, and they were trying to hire a 4th person, which I guess they have done.
Mm-hmm. Okay. And what were those was the operator of record the Mr. Johansson?
Yes, Mr. Johansson is the
And
operator. He has the licenses to run them.
Okay. Was he present for your tour? And
Yes, he was present during the entire tour.
Okay. So part of the consternation we have are the public comments that we received. Were you in the public hearing? Did you listen to that? Have you heard about those?
I have heard about them, yes.
Okay. How do you respond to the comments submitted in the public about Daufuskie's ability to handle increasing saltwater intrusion?
Again, I'm not a water quality expert. I think the POA witness knew way more about saltwater intrusion than I would ever know.
I'm going to go back to a previous question. Is the operator required to keep complaint logs?
Complaint logs. You mean customer complaint logs?
I think so, yes.
I don't believe so.
Okay. Okay. And you've not
He
seen
does
any...
keep leak reports, which I do, which were provided to us during discovery.
Well, tell me about those.
This was the company's response to ORS 2111. And it is the Higg Point leak repair log, and I see 1, 2, 3, 4, 5, 6, 7 leaks that they repaired during the year.
And that's it? No other leaks?
That's all that's on the report.
Okay.
I believe he may also have they also provided hydrant flushing data, which shows the pressure, the static pressure, the flows of each fire hydrant, and all the fire hydrants seem to be outputting reasonable rates of flow for fire service.
Was there any record of complaint of overflows and sewage overflows?
Not that I received, no.
Okay.
And I think the last item that I may have is he may have completed the AWWA water audit, which lists the amount of water that was put into the system during the year, and the lost water and the non-revenue water.
The amount of water put into the system?
Essentially, it's the water supplied into the system, which was approximately 80.5 million gallons. And of that, they're listing water losses of 20.1 million gallons. So about 25% of what they put into the system was lost water.
Thank you.
You're welcome.
So there was also no record of any property damage that the DIUC had relative. And the only example I have is the storm was the sewage overflow, but there was something about pressure.
I heard that testimony, but I have nothing.
Okay.
I have no information about that.
For Daufuskie, and for the safety plan, is there a chlorine release response plan? Is that a safety issue?
That's part of their safety plan, yes.
And they have such a plan?
They do have such a plan.
Okay.
They also have an emergency response plan.
And what is that?
In case of a chlorine release, or they also have a plan that would, they would institute it during the time of the hurricanes. In fact, I called them, we just had a hurricane, was it Ivan? I called them, Kiowa, and a couple of others to make sure that their emergency response plans were being put into place, and if they needed any assistance in doing that, they told me no, that they were good.
Okay. And you've hinted at this already, but to your knowledge, does Daufuskie work with a fire department? You mentioned hydrants, I think.
Well, there are 200 and, subject to check, 209 or 215 hydrants on the island.
And what is the responsibility of the DIUC for those hydrants?
To ensure that those hydrants are operational in case of a fire.
And there's something called a chlorine cylinder. Is that?
Well, their treatment is chlorine gas. So
Right.
there are cylinders at the well houses that contain the chlorine gas.
And how are they secured?
They are in a locked building, inside the locked building. You can get to the diesel tanks. They are outside, but the actual chlorine gas is inside the locked building.
You mentioned that you heard about the public hearing testimony. Did you hear about the gentleman who discussed the old pump house and lagoon? And can you add any additional information in that regard?
I cannot, I'm sorry.
Okay. Thank you very much. I appreciate your patience.
Thank you.
Commissioners?
Madam Chair, this is Commissioner Thomas.
Commissioner Thomas?
Thank you.
Good afternoon, sir.
Yeah, thank you all for being here this afternoon. I guess first I'll start with Ms. McGlone, and to start off, I'd just like to say it's good to have you, and thought you did a good job on your opening comments.
Thank you.
Appreciate it. So let's talk a little bit. You got some questions about the company paying a dividend, and is it correct that the company gets to decide whether or not it pays a dividend?
That is correct.
And is it correct that some companies pay a high dividend, some pay a low dividend, and some pay no dividend, and it's whatever they choose?
I would think that's correct, yes.
And if the company chooses not to pay a dividend, then could there potentially be other benefits to the company or its owners by not paying a dividend?
I think kind of generally speaking, the earnings, so basically the profit of the company that's not being paid as dividends would theoretically be retained earnings, which could be invested back into the business. There may be some other opportunities for that money as well. That's one that I can think of offhand.
Okay. And if the company chooses not to pay a dividend, then I guess basically dividends are paid out, retained earnings, and the capital structure. And if the company pays a dividend, then the equity side of the balance sheet declines with the payment of a dividend. Is that correct?
Yes, that is correct.
And does it benefit the company in a rate filing to have a higher equity side of the balance sheet when you're figuring capital structure and rate of return?
So there's kind of a two-part answer to that question. Generally speaking, a company that has a higher equity ratio, as we see from the company's test year equity ratio of roughly 63%, that means the company has less financial risk, which we can kind of see the push and pull in Mr. Guastella's reference in Florida. The way that the Florida leverage formula is set up, the higher the equity ratio, the lower the outcome of the ROE calculation. So that is one piece. Higher equity ratio would equate to lower financial risk. The other piece of it would be not necessarily the equity that the company is holding on its balance sheet, but the capital structure that is ultimately awarded to the company in a rate case. I made a recommendation based on my analysis for a 51.99% equity ratio, and that's because I feel that's more appropriate. It approximates the 5-year average capital structure of the companies I use in my proxy group. Mr. Rothschild used the same proxy group that I did, and he looked at just basically the most recent year, not the 5-year average that I did. And he came up with, I believe it was about 48.4%, give or take, equity ratio. So it does depend, I think, less about what the company has on the balance sheet, rather what it's awarded for rate setting purposes, if I'm understanding your question.
Right, but generally the beginning of the process is to look at what's on the balance sheet, what's on the books. Is that correct?
Correct.
And by not paying a dividend, then the equity component on the books would be higher at the beginning of the process. Basically, the first thing that people look at when making these calculations. Is that correct?
Yes.
Okay. And so then assuming that that does end up having an impact on the rate of return calculations, then that would theoretically increase the rate of return, which would, of course, flow through to higher rates. Is that correct?
Correct. A higher equity ratio would lead to an increased ROR.
Okay. And so theoretically, then that would make the company worth more money. Is that correct?
I do think that's one way to look at it. In rate setting, it would certainly lead to higher rates for customers. The return on equity component, for example, would, it's a little different than the capital structure, but the return on equity component obviously is an opportunity for the company to earn a return on its equity. So the higher that it is set, also the higher the ROR. And I believe, as Mr. Rothschild mentioned when he was testifying yesterday, using a higher equity ratio and a higher ROE would definitely be in balance. It's, as one goes up, the other goes down, essentially.
Okay. So then I guess what I'm hearing you say then, that by having a higher equity component on the balance sheet, and if that does flow through in some way in the rate case in terms of setting the rate of return, then I think I heard you say then that does, just in terms of the value of the company, generally speaking, that would be viewed as making the company worth more money. Is that correct?
I do think that's a fair characterization. It would certainly be giving the company more revenues, and depending on the company's costs, would ultimately potentially lead to more revenues, more earnings, more profit.
So if the company chooses not to pay a dividend, then it potentially could make the company worth more money. And if the company were sold, then could that potentially be taking something that would have been paid out to owners as a dividend and converting that to a capital gain in the event if the company were sold?
That's a great question. If I follow you, I think so. But I'm not sure that I have a clear answer for you on that.
Okay. All right. So switch over to a little bit different topic here. So yesterday, Attorney Gressett asked Mr. Rothschild's questions about
Can you hear?
independence.
Commissioner
And-
Thomas, I'm sorry to interrupt, but your volume dropped and the court reporter's having to struggle a little bit to hear you. Can you?
All right. Is it better now?
That's a little better. Thank you, sir.
Okay. So yesterday there were some questions about independence in terms of Mr. Rothschild's independence, and did you hear those questions?
I did.
And do you think that it is important for independence to be a factor for a capital structure witness, an ROE witness?
I think in the case of both Mr. Rothschild and myself, independence is certainly appropriate. We in no way discussed or coordinated our respective analyses. We were analyzing the company and appropriate cost of capital independently of each other. When it comes to an analyst who may have, a question to ask of a peer, I think that would be a little different. But in a case such as this, where Mr. Rothschild was representing the DCA and where I was representing ORS, it would certainly not have been appropriate for us to have had any communication.
Right. But I'm talking about independence in terms of connections with the company.
Apologies.
You don't have any relationship with the company. You get paid to do your job, and so there's no independence issue there for you, is there?
No, certainly not.
And so did you hear the discussions about the contract between Gostella and Associates and the company?
I did, yes.
And I can't remember the numbers, but there was some discussion in there about if the company is sold, then Gostella and Associates gets a percentage of the sale, and the higher the sales price, then the bigger that percentage gets.
That's my understanding, yes.
Okay. So doesn't sound like Mr. Gostella and his company are quite as independent as you and Mr. Rothschild when it comes to evaluating the rate of return and capital structure. Would you agree with that?
I think that would be correct, yes.
Okay. So do you believe that given your recommendation that the financial integrity and ability to attract capital would be reasonably protected based on your recommendation?
I do, yes.
Okay. All right. Let's see. Thank you. I think I'm ready to switch to Mr. Hunnell.
Thank you, Commissioner.
Thank you. Good afternoon, sir.
Good afternoon.
Can you hear me okay?
I can.
Okay. So you recommended in the case, in the event of a cost of service study, that an RFP type bidding process occur. And I guess in terms of that RFP process, it would be important for that to be managed independently of anybody that's making a bid. Would you say that's correct?
That's correct. In my mind, another way to overcome that would be for the company to, as part of its next rate application, when it's seeking recovery of the expenses related to those studies, to provide copies under seal of all of the bids so that both the commission and ORS can review those to ensure that the the most qualified consultant at the most reasonable price was the one actually chosen.
Okay. But the company itself would be allowed to bid. So would it not be appropriate for all bids, whether it's the company bid or other bidders? Do you think it would be appropriate for everyone to file those with an independent person as opposed to one of the people that is making a bid?
That would be another option, yes.
And
I'm not sure I can advocate for that, though. I believe the commission would have to order that.
Okay. And do you think that ORS would be an independent party that would be able to collect those bids and make sure that they stay confidential from one another?
Madam Chair, I hate to object. ORS can't select the
Yeah, I don't believe
consultant
ORS.
to complete the study.
Okay, I'm not.
Do you hear the objection? Did you hear the objection, Commissioner?
I did.
ORS, I think, their concern seems to be maintaining their independence and not being put in a position of selecting a winning bidder from this.
That's correct, Madam Chair.
Thank you.
Very good. I understand that, and I guess I'm not really saying ORS make the selection. I'm just trying to figure out a way how to get those bids in. What would be the appropriate way to get those bids in from interested parties? It just seems a little bit counterintuitive to me that if Costello and Associates is getting the bid, but Costello and Associates is the one that's managing the process and getting those bids. I think the bid process is a good idea. I'm just trying to figure out what would be the appropriate way to make that happen.
Commissioner Thomas, I agree with your concerns. However, I don't have an answer to that question.
Okay.
I don't believe it's appropriate, though, for ORS to make the decision of who is the winning bidder.
Okay. Well, I'm going to leave that just kind of as an open question hanging out there. And if anyone has a good idea, then I'd like to hear about it. And so a little bit more in connection with the cost of service study. Do you have any reason to believe, or do you think there is any cross-subsidization occurring between the customer classes, or you just don't have enough information to know? I mean, what do you think?
Well, that's the point of completing this study. The company's never completed a study. It's never completed any analysis to determine whether any type of that is taking place. And until a cost of service study is done, we won't know. We won't know who's subsidizing who, or if the availability customers are properly subsidizing the customers who are taking service.
Right. And then there is the, I guess in my mind, there's an issue. I believe that there are only two customer classes. Maybe that's appropriate. I don't know. But maybe it should be another customer class. I have no idea. And is that something that could perhaps also come out in a cost of service study?
Well, actually, I believe there are three customer classes. Well, I would consider there are four customer classes. There's the availability class, There's the residential class, the commercial class, and the irrigation class.
Okay. You're correct. Okay, thank you. Been thinking about just availability and regular customer class. Okay, I think that's all I have for now.
Thank you.
Thank you.
Thank you, Commissioner Thomas. Vice Chair Powers?
Thank you, Madam Chair. And good afternoon. I'll be brief. Ms. McGlone, first, welcome to the commission.
Thank you.
And I will say, I was reading a lot of this testimony. My girlfriend was in the same house grading papers. She teaches English at USC, and I can't help but think on one of your submissions, I put on the front, good points throughout. So I guess you got an A on this one.
Well, thank you. I appreciate that.
But I'm looking at your rebuttal testimony. You said that Mr. Costello, in disagreeing with you or discounting your calculations, that his answers were just general in nature, and that he didn't lay out any good reasons. Could you kind of explain that? I don't want to just blow him off on, as for not agreeing with you. What would he have need to have provided to, or what would his argument have been to have been responsive to your original testimony?
Certainly, that's a great question. So Mr. Costello really didn't, in my mind at least, didn't rebut my methods. He made some broad statements such as, I didn't consider the company's sensitivity to earnings erosion, but I wasn't able to find any solid evidence of that, and I'm not sure, even now I'm really not sure what he means by that. Similarly, he states that I didn't consider that the company has never paid dividends. I am aware that the company hasn't paid dividends. They provided us that in discovery, but it's just not a material aspect of a cost of equity analysis. So that's why I made the statement that I did. He listed, I think, 8 bullet points in his rebuttal testimony, and I looked at each of them, and I could not find the actual intent behind what he was saying as far as his criticism of my direct testimony.
Okay. You would agree that he certainly is well educated in the field and has been qualified as an expert in several different areas.
I do not dispute his qualifications at all.
You just don't think he answered you in a sufficient manner. Is that what you're saying?
Yes, and in my understanding, I've been working with the ORS for 4 years now. In my understanding and the rate cases that I've worked on since I joined ORS, it has become abundantly clear to me that sound cost of equity analysis should be market-based. Mr. Costello really didn't provide anything to support his recommendation. I think he quoted his experience and judgment in his direct testimony. He cited the states of Connecticut, Massachusetts, and Florida, which I looked at the documentation. We asked for the supporting documentation for those. And I actually dug a little further. His Connecticut analysis, for example, that he cites in his in the application on Schedule A3, indicated a base ROE of 9.69%, and then Connecticut, in the way that it has its process set up, allows for a 50 basis point adder, so 0.5%, and that's just a fixed adder for what they call small company, and that's any company that's not the 2 largest water companies in that state, and then a variable adder that can be up to 50 basis points per performance. And he applies basically 100 basis points to that 969 to achieve a 10.69%. The issue I had with that, for example, not aware of any statute or regulation here, or commission practice of awarding adjustments for a quote unquote small company or a performance, so to speak. I mean, those are very arbitrary numbers. They don't change other than the variable performance adder, I guess. But in addition to that, when I was doing my research, I found out that actually those two large water utilities in Connecticut have since both had rate cases. So their base ROEs have been adjusted, and actually their average now, instead of the 969 that Mr. Guastella was citing, is actually 9.07. And those ROEs were based on the capital market analysis and market-based analysis like I'm using in my testimony, and if I might add, like Mr. Rothschild used in his testimony as well.
Okay. Well, and we start talking about the equity and the debt sort of thing. I have to see scales of some sort. Now, what they actually have is, I think it was 63% and 37% or numbers in that range. And your recommendation is 51.99 and corresponding would be 48.1. Is that right? How does a company get from here to there?
So if a company were to change its actual capital structure, in the case of Daufuskie, where its actual test year capital structure was more heavily weighted to equity, it could do a number of things. It could reduce the amount of equity that's on the books. It could increase the amount of debt that's on the books. I don't think that my recommendation was necessarily a recommendation that the company rebalance its capital structure so much as that would be an appropriate capital structure to use for the purposes of setting rates in this rate case. But you are correct. I mean, when you have either of those levers, it's a good analogy to use the balancing. You either have to increase one or decrease the other to achieve a different number.
And I noticed you were here throughout the testimony and throughout the case. And you've heard this talk of the $1 million, wherever it is, and there's been a real influx of money put in by the owners. I don't know whether it's 150 or 250 or what the number is. Could that number, if they were required to have the balance you wanted, could they use those numbers and make that a part of their business plan such that it, without going and borrowing money, and the owners could balance that, or are those numbers useful in any way in any of this?
It's a very good question. I will say part of my hesitation with that is I certainly am not aware, and I'm not sure who would be aware of the actual amount of money that we're talking. Not only how much in a cash infusion, if you will, that the owners have put in, how much has been paid back out to them. I don't mean to interrupt you, but in the emails, it was mentioned, we need this, we need that, and sure,
it was given.
Sure. And you know, when I did look at the emails that you reference, when I initially saw those, my thought was that seems to me more of an equity infusion. I'm not aware of an agreement that was made with any certain term to maturity, any certain interest rate, if there would be one. I regarded it as just an equity infusion, no different than I don't have my own business, but if I did, and I put $100 of my own money into it, to me that would be a $100 equity contribution to the business.
But couldn't it be assigned to a note and make it a debt of the company back to the owners?
I suppose it could. I'm not sure that would be necessarily, but I do think that there is the potential that it could be structured that way.
Okay. In any of your research and preparation, did you run across the $1 million that Mr. Guastella testified about?
I did not specifically. I remember seeing the references in the emails where Mr. Guastella had asked the owners to provide various amounts of cash infusions. But I will say also, I think our audit team would have been much more deeper in those numbers than I would have. I don't think those would have come up in the course of my review.
Okay. Well, thank you very much, Mr. Hummel. I think they pretty much ask you about all I could possibly think of, and I'm going to let you off the hook.
Well, thank you very much.
Thank you.
Commissioner Caston.
Mr. Hunnell, in your exchange with Commissioner Williams, you said a couple of things that piqued my interest. I want to make sure I heard you. You referenced, I think, an AWWA.
It's called a water audit.
Okay.
Excuse me, just a second. We need to take a 10-minute break. I think one of our virtual commissioners lost a connection. He's back. Okay, I apologize for interrupting. Go ahead.
Okay. Could you repeat those numbers or what you said? Because I thought I'd kind of asked something about that a day or two ago, and I just.
According to the audit report, in the year 2021, volume from own sources, which would be water supplied into the system, was 80,555,000 gallons. And then when you come all the way down to the bottom, where it adds up water losses from various, either there's water losses from unauthorized consumption, there's water losses from systematic data handling errors, there's water losses from apparent leaks, and then there's real losses. When you add all of those up, the total water losses for the year were 20,190,000 gallons. So that equates to about 25% of the water that was supplied into the system was lost water.
Does that mean anything to you? 25% unaccounted for water. Do you know what the AWWA standard is?
Well, when the AWW came out with a water audit, it changed the standard. The standard used to be like 15 to 20%, maybe a little less, 10.
Well,
I know, but they went to this water audit, and what the water audit's supposed to show is that over time, that it decreases the amount. The non-revenue water should decrease over time as they do it, because now they're able to more identify where their losses are coming from, so they can better address how they're losing their water, if that makes sense. Is it coming from leaks? Is it coming from people stealing the water? Is it coming from meters they should be able to better identify that by doing the water audit itself, so that they can target their CapEx spending to fix those items, to bring their water down. So year over year, we should see a decrease in the water audit, lost water.
Okay, I think I understand what you're saying, and I didn't know.
Right. And they kind of retired the 10 to 15% amount that they had.
Basically.
So this is basically a baseline that I believe ORS will use going forward. We started using this in the Blue Granite water case, and Blue Granite began doing this. So that's one. So of course, next time Blue Granite comes in, we're hoping to see that their non-revenue water actually went down. Same thing with this company. If it's not, then we may start asking questions as to whether it's an appropriate amount to make an adjustment for the lost water to something like purchase power or chemicals.
So you're saying that it's not so much no longer a 10 to 15% in that standard range, but it's more an unbilled versus unaccounted for. Unaccounted for means you don't really know where it went.
Yes.
Correct?
Yes.
And unbilled simply means, well, you kind of know where this went or this went. You've accounted for it, and it's kind of where it is, but the rest you just don't know.
Right.
So over the course of time, if you have implemented a program, if the utility has implemented a program to do those kind of things, they should identify those kind of things and reduce that amount of unaccounted for water, correct?
That's correct, sir.
And what is the significance of that unaccounted for water?
Well, it's every dollar that they produce, every drop of water they produce that they don't get, the customer's paying for. The customer's still paying for the 80 million, even though they're only delivering 60 million.
And that cost?
That's costing purchase power, chemicals.
All production costs, whatever that's involved.
Yes, sir.
Is that what you're saying?
Yes.
Power, chemicals, water.
Right. surface treatment plants would have waste disposal along with that.
Do they have an active program to, did you say DIUC is,
Well, I'm assuming since they were actually doing the water audit that they must have a program, I'm assuming.
when did they start it?
I don't know.
What-
I was provided the most recent 2021 as part of the, it was response to 2109.
Well, would that not matter?
Well, I figured I would just use this as a baseline going forward.
So that's your baseline.
That's going
so-
to be our baseline going forward, yes, sir.
Okay. Now, the other thing, which piqued my interest, do you know, because I think Mr. Guastella said he thought that the pumping capacity was 75 million, but there were some others, and it might be 100 million. Do you know what it is?
Their pumping capacity well exceeds, I believe, what their permitted amount is.
I'm sorry?
I believe that their pumping capacity is actually far exceeds what they actually can take from the aquifer.
Do you know what it is?
I know that they have 3, bear with me 1 second. Three of their primary wells have a 1,500 gallon per minute total yield.
Repeat that.
They have 3 primary wells with a 1,500 gallon per minute total yield.
4,500 gallons a minute.
That's what those 3 wells can produce per minute, yes. And then they have 4 primary
Is that the permitted capacity?
That's not their permitted capacity.
What
That's the
is the-
capacity of the wells itself.
What is the permitted capacity?
I believe the Bloody Point side is 75 million and the Melrose side is 50 million.
That's per year?
That's per year, yes, sir.
So 75 plus 50 is what, 125?
125, yes.
And you said that this audit showed 80,555,000.
Yes. So they're well below their permitted amount.
They're not at the 80% yet.
Yeah, they're not at 80% yet, no.
It took Carol Lee for me to get that information. I appreciate it. Thank you very much.
You're
If I'd
welcome.
asked better questions, you'd have given it to me.
Thank you.
Thank you very much. Appreciate it.
Good afternoon.
Good afternoon.
Ms. McClone, when is, would you consider your, capital structure based on your proxy group a hypothetical capital structure for this company?
I guess in comparison to the company's actual, you could look at it as a hypothetical. It's certainly not arbitrary though, because it is based on data
I
derived from
understand.
the proxy group.
When is the use of a hypothetical capital structure appropriate?
So I would consider the use of a hypothetical capital structure appropriate when the actual capital structure doesn't approximate that of the proxy group. The reason being that the proxy group is, obviously those are the companies that I retrieve data from to estimate my cost of equity. And over the last 5 years, on average, the companies have been carrying roughly 52% equity on their balance sheets.
So if a proxy group, if the average capital structure of a proxy group, whether it was the 7 companies or the 10 companies, if that is significantly different than what the actual capital structure of a utility in a rate case is, you would recommend using that proxy group or hypothetical?
I would, yes.
And how would you describe materially different or significantly different to require the use of that proxy group average?
Certainly. I wish there was an industry standard that specified X number of basis points. I'm not aware of there being one. I think within reason, it is a bit of a judgment call, depending on what the actual capital structure is and what the average of the proxy group is. In this case, there was such a substantial difference that I recommended that for rate-making purposes, that the capital structure be adjusted.
Okay, and you've used, there was such a substantial difference. I mean, is there a range that indicates what substantial difference is? Is it 500 basis points, 1,000? I mean, I'm just curious.
Sure. I don't think, again, that there's an industry standard, so to speak, but from my, let's just say 52 to round it, my 52% average for my proxy group to even the 63 and change for the company's actual test year capital structure equity ratio, that's 1,100 basis points. That is certainly, in my mind, significant.
And you indicated, well, it was indicated by Mr. White, and you commented on it too, that the utility had updated its capital structure through Mr. White's rebuttal testimony. Is that correct?
That is correct.
And the basis for that update was, do you recall?
The company didn't describe in its rebuttal why exactly the equity amount changed. My understanding from Mr. White's rebuttal is that the company felt that it was appropriate to use the actual balance of its debt. Those numbers stayed the same from the application. However, the balance of equity in the 4-month period from when the company filed its application to when it filed its rebuttal testimony decreased by almost $1 million. That's what attributed to that change in the capital structure, reflecting a 60.55% equity ratio as opposed to the 63-64% from the application.
Okay. Thank you very much. Mr. Hunnell, I'm going to let you off the hook today. So, Commissioners, any further questions? Redirect.
I have no redirect for Mr. Hunnell.
Thank you. Mr. Knowles?
And none for Ms. McGlone. Thank you.
Thank you. Y'all may stand down. Thank you much.
Thank you very much.
Ms. Barker, I just want to recognize you in the hearing room. It's good to see you. Anything further from ORS?
This concludes ORS's presentation of its case. Thank you, Madam Chair.
I'm going to address this just to the parties at large. I asked if did y'all have a chance to talk about a late filed exhibit to update a cutoff date and an update on rate case expenses? Have y'all reached anything on that?
Yes, Madam Commissioner, we will use today as the cutoff date. We will provide updated information to ORS on or before November 1st. We will also, in that information, attempt to clear up some of the remaining issues about those 2 repeated invoices and other things, and we'll supply all that to ORS.
Okay. You also need to let the other parties know as well. Even,
Oh,
yeah,
yes,
I mean,
yes, for
on
sure.
that. Is that the agreement?
Yes, ma'am.
Okay. Thank y'all for working that out and getting that.
On behalf of, I'm sorry, let's see, ORS agreed to it. I'm only speaking for ORS
Okay.
when I say
Mr.
that. I
Pringle.
can't speak for others.
Any comment?
I have nothing to say.
Mr. Parker, Ms. Barker, anything on that?
We have no issue or comment. Thank you.
Okay. I appreciate y'all working out the dates, and I appreciate you making it an exhibit. I've always feel like there's a hole in the record if that's not an exhibit to the transcript. So, thank you. That proposed order date is November 14th. Does that sound right? Y'all have worked it out with the court reporters about the transcripts. Is there anything else to come before the commission before we adjourn? Thank y'all. I know we've had a long 3 days, 2.5 days, 2 3/4 days. Appreciate everybody's professionalism and your attention as you've worked through the cases. So thank you very much. It's pleasure to work with y'all. And with that, we will adjourn this hearing, and you'll be notified of our decision at a commission business meeting. Thank you.